This is the briefing for Friday, April 19th. Well, since last week, I've been looking at the potential strategies on this market sell-off. Now, Monday was an important day because the spiders broke through the 510 area. That's the first time they've done that, which violated the previous series of higher highs and higher lows, suggesting that we were in a greater degree time and price counter trend rotation. So since then, we really looked at a couple different possible scenarios, of one being a three-step counter trend move that was complete at one point in time, but the market continued to slide, so that eliminated that strategy. Second was the potential for a three-step counter trend rotation where step one was complete, step two was potentially in the offing, and then step three would be another thrust to the downside, and that was negated as well based on the continuation of the slide in the stock indices over the past trading week. Now this is 30-minute charts of the spiders, and this is the 30-minute chart of the Qs. This is basically the slide that started. Now this is a 510 area on a daily chart. This was a major key reference area where we transitioned from a short-term counter trend move to at least an intermediate term counter trend move, now approaching potential for an even longer move. Now these trend lines I have set up, these are for my personal trading. These are areas that I look for. These are all now support or should say resistance areas, and I'm looking at about the 490 area as the next downside support for the spiders. The same thing in the Qs. Now the interesting thing that's happening here is what's happening with market breadth. Now you can see this is NYSE breadth, and you can see how all week basically how breadth has been strengthening and diverging from what's happening with price. Volume really wasn't that great on this move to the downside, which gave me some skepticism in terms of what the length and depth of this move could be. But going into the end of this week, volume has increased, and it appears that this market has some fear in it, but it's not the type of fear that is going to bring in a lot of selling all at one time where we see major gaps. At least at this point in time, it's not. Now, there could be a news event that happens over the weekend or the first part of next week that can change that, and we could see just major selling before we find some type of a bottom. Now, I'm watching very carefully what happens with market breadth, because the trend in breadth is up, which means that it's strengthening here on the move to the downside. But we close near the low of the day in both the spiders, the Qs, then that does suggest that potentially we will see lower prices at the open on Monday. Now, there's potentially a lot of news events out there in the coming week and weeks that can change the perception of value, but right now all we have to do is trade the information that the market gives us, and we have to analyze that each day and determine what the potential is, or what the higher probability is of one event occurring over another. This is the daily chart of the spiders, and significant, you can see this is the 490 area. That's the next level of support in the spiders. Now this area right here, the 502, 503 area is going to be potentially minor resistance on the way up, but 510 is going to be really important resistance, because that's the breakout of this area of rotation that goes back pretty far in terms of trading days. And you can see volume in the spiders beginning to pick up finally, and you can see why I was concerned about volume earlier this week. As we came down through here, volume was actually declining. Now this is 52-week highs minus 52-week lows, and you can see the trend is down, but then again we picked up over the last couple days, but still the trend of that is lower, although it's not as low as it was at, I think, at 527 shares at one point in time. And then of course NYSE breadth was positive today, about a little over 1,000 shares. The Qs were getting really hit today. NASDAQ was getting hit today. I understand Apple and Meta were part of the problems. Tesla was down today. So there were a lot of big names in the NASDAQ that were down in today's trading. And you can see It opened right at the 420 area, sold off through that area, and now is testing the 414, 415 area, which is pretty important key reference area. Now, as we look at these, the run, pause, the next level of support is going to come in potentially right here at the 394 area in the Qs. Now you can see volume finally picking up. You can see the divergence I was concerned about earlier this week. I'm still concerned about the divergence in market breadth. This is just really something that very rarely do we see without seeing some type of move back to the upside. In terms of the Russell traded through this 196 area and of course has held just above the 190 area. That's the next level of support. Keep in mind, the Russell is basically in an area of rotation right through here with an attempted false breakout, a second attempted false breakout, but back through the rotational area. So for the Russell, the really important support area is going to come in right around 187, right through here, because that's the lower extreme of this area of rotation as well. Volume ticking up slightly in the Russell in today's trading, and the IWM, I should say, and breadth diverging also in the IWM as well. Now, here is really the crux of what's going on. This is my indicator for overbought and oversold market. Price is down, yet we're approaching an overbought condition. So that divergence is a result of the breadth part of this indicator that has been strengthening all week as price has been going lower. So it's going to be interesting to see what the resolution of this divergence between this indicator and price is itself. In the NASDAQ, not so much, because the NASDAQ breadth wasn't as strong as the NYSE breadth, so it's basically neutral at this point in time. But this gives the market the potential for a move to the downside, but potentially a significant move to the downside. But I am just very, very cautious right now of this move, mainly because the move is just kind of a slow grind lower with a three-step counter trend move, another slow grind lower, a pause in here, another slow grind lower, another pause, and then of course going into the close today, being close to the low of the day. So this is concerning. I would be jumping in with both hands and feet to the short side of this market, except for this right here. I'm just very cautious of the potential for the market to catch hold of this move here and then begin to move substantially higher. Now, going back to total volume, this is total volume on the NYSE, and you can see that it picked up dramatically today, and it did also in the NASDAQ. So volume is now confirming the move to the downside, which it was not previously, and breadth is not confirming the move to the downside. So we have a divergence between the internals of the market itself. The resolution of this, hopefully we'll find out the first part of the week, but keep in mind, and the way I'm going to approach this next week, I'm going to be a little conservative to the downside unless I see breadth begin to weaken substantially. And volume continue to increase. But I'm going to be watching these key reference areas that I have marked on any move to the upside. And then, of course, the moves to the downside, we're now looking at, there's nothing really short term until we get through Monday's trading. But now I'm looking at these levels through here. That will be the next levels of support coming up in the coming days. So breaking 190 in the S&Ps, we should see some pretty good selling come if that level's broken, and we should see some volume increasing, and the internals should be at least breadth should be decreasing as well. One other thing I wanted to show is these are the stocks above their 50-week moving average and the percentage of stocks above the 200-day moving average. This is for the S&P. Both are. This is the 50-day moving average. This is 200-day moving average. So you can see the deterioration that's happening from that perspective in the market as well. And also in terms of the NASDAQ, this is 50-day moving average. This is 200-day moving average. You can see this is a weekly chart, so you can see the deterioration that's happening in terms of trading through the 50 and 200-day moving averages, even though breadth is strengthening and strengthening slightly with each passing day. And the same thing with the Russell 50-day moving average, 50 period and 200-day moving average for the Russell as well. So there is some weakness in the market. You can see on a weekly basis that the move to the downside is becoming exacerbated, but I'm still concerned and still want to see what happens in terms of market breadth in the coming week, at least in the short term, based on this divergence that is giving me a little bit of heartache, or a little bit of heartburn, I should say. Anyway, it should be an interesting open to next week. The first hour of trading will be important, especially if we have a lower low and we don't see breadth begin to eliminate this divergence. Now, it doesn't need to be back down to this level, but if we see a lower low and breadth is headed down this way, then we're probably going to be headed lower for the day. If price is lower and breadth is remaining on this trend line, I'm going to be just very, very cautious of my shorts at that point in time. Have a great weekend, and I'll pick this back up again on Monday for subscribers.